for joining the first webinar for PikoHANA. And it's going to be a very interesting one because this is going to be the first part of a multi-series that we're going to be doing on a consistent basis, talking about the awesome elements of back office, accounting, and all the awesome things that PikoHANA does. But kind of before we get into what PikoHANA does, maybe we can start with some intros. So I'm here with the founder.
Well, hello, Will, and everybody. I can start out. Sorry, Will.
No problem. Go ahead.
For some reason, the sound seems to be breaking up on my end, but I'm sure we'll adjust. Anyways, to introduce myself, and I want to first off thanks everybody for joining the webinar, wherever you're at, morning, afternoon, evening. It's good to be here, and I'm hoping to add quite a lot of value to our founders and entrepreneurs out there that need help. So my name is Matt Foley. I'm the CEO of PikoHANA, a service provider based in Singapore. We provide coverage not only in Singapore, but Hong Kong, Malaysia, Indonesia, and other jurisdictions in Asia. So we can cover you for all of Asia as far as your setup, market entry, everything you need to be up and running on the ground in Asia. I think my objective today, and I know that the title of this webinar is Unlocking Asia, that's true. Maximizing profits and investments, yes. Minimizing tax, absolutely. But what we're really talking about here, in my opinion, is wealth creation and wealth preservation. And it all has to do with where founders set up their companies. So, I mean, that has a massive impact on the net cash flows that investors, not only founders and the entrepreneurs who run these companies, but investors and shareholders. I mean, it has a massive impact on the net cash flow of the firm and what they can take out of the firm. So before I get into it with Will and the Q&A, I wanted to introduce Jaime Tan. She's our head of global growth. Jaime, you want to say a couple words?
Hi, everybody. Thanks for joining. It's really exciting that we're doing this, and I must attribute it to Will and the team. This whole series of webinars that we'll be conducting, it's really all about legacy building and wealth preservation, right? I'm really excited that we're actually doing this, and we're hoping to help founders and owners, operators, skill, right? But skill wisely. And that can be done easily with smart structuring, especially leveraging on Asia. So over to you, Will.
Absolutely. So look, it's so common that people engage companies like PikoHANA, specifically PikoHANA, when it's too late. Right? So they're looking at it more like an ambulance, or they're looking to expand into other markets. As we're talking about unlocking Asia, there's so many regions out there that want to break into Asia. They talk about it, they kind of push it to the side, or they travel into the region and they always say, gee, one day maybe I'll just, expand into Asia, or I'll go into the region. But they never actually do it because maybe they think it's unattainable, or maybe they think it's something that is really complicated, or they don't realize that there is a PikoHANA that exists that makes that whole process completely seamless. And, this is something that I think is going to be super important for these founders, particularly in places like Canada and throughout Europe, specifically those areas, to really take a look at this webinar and kind of see what Matt and Jaime have to say about a lot of the advantages of having that Asia Pacific, APAC expansion, and some of the not only advantages of it, but also the longevity, as you said, Jaime, as well. So that kind of leads me to the next part, which is why we're running this series, which is the biggest quote that you guys always get. I know we talk often, and one of the main quotes you always get is, why didn't I meet you guys earlier? Right? Oh man, I've I've thought about this. I've done deals in Asia, but man, I didn't realize I could actually set up a home base in Asia. So maybe guys can expand a little bit more on that. Like, why are we running this series? What message are you really trying to get out there in this multi-part series that we're doing for PikoHANA?
Well, I think one of the key messages I want to get across, going back to the wealth creation and preservation, is that it doesn't matter where you live in the world. You can easily set up a company here, not only in Singapore or Hong Kong, and run that company from anywhere on the planet. The advantages of doing that is that your company and maybe even your personal wealth are ring-fenced in a jurisdiction that are compliant. They have a very reliable and well-known legal infrastructure. And there's opportunities to deploy that capital, whether you're investing in your own company or other investee companies, or even putting it through a brokerage account here. That is super important to understand, because a lot of our clients who do this, they may live in one place or another for 3 to 6 months and then move around. So they're not really tied down to any kind of, I would say, overly compliant. Is that the word I'm looking for? Rigorous KYC. It can all be done and handled remotely. And that's one of the benefits of setting up in Asia. But going back to my initial comments, when you start looking at your structure and where you're going to put your holding company or the firm, basing it in either Singapore or Hong Kong provides a lot of benefits beyond just the compliance standpoint and running your company remotely. Again, going back to the taxation situation, and we'll get to that in a second. It is, and why give up 50% of the company's profitability to basically a government that is unnecessarily done so? So, the Singapore Hong Kong option allows you to reinvest that money in the firm or put it to work in the market. I would say that's probably the key message to get across. But we'll look at these tax rates as a comparison, and you'll see that it's mind-numbing. And going back to your comment before, Will, we talk to founders all the time that for one reason or another, they do not set up in Asia, but they accumulate personal wealth in Asia. And instead of putting that into maybe a company that holds their personal wealth, some might even refer to it as a quasi-family office, and then they repatriate back to Europe or Canada, and they get hit with a massive tax bill on that. In fact, we've recently had several founders tell us about that, where they repatriated, got hit with a massive tax bill, and they could have avoided that by just leaving it in a company in Singapore or Hong Kong. And still, this doesn't restrict your access to that. It doesn't cause any problems from how you manage the company remotely. It's all legal. It's tax efficient structure, not tax avoidance per se. And it's just a much smarter way to run your company.
That's amazing. That's amazing. I mean, it's interesting, because do you think that, it almost sounds too good to be true, right? So
yeah,
do you think the reason why, you agree, right? Like, I think that ultimately maybe the reason why more people don't engage in what you're saying is due to lack of exposure and lack of knowledge to even know how these things operate. And there's not many entities that are sitting, let's say in Europe or Canada, that are actually telling them to do these type of things. Would you agree with that being the reason why, this might seem too good to be true, but it's right there for them?
Well, I think it's a pretty complex, series of actions on the part of these founders. You take a founder in Germany, and we had a situation with one of our clients recently who was setting up a company in Singapore, and then he realized that in Germany there is an exit tax if he were to move everything offshore all at once. So we would have to manage that for him and find a way forward where he wouldn't incur that exit tax. As far as why they do it in the first place, I think it's a lack of knowledge, which is why we're here today. I think that they probably perceive the setting up of a company in Asia as being a burden, difficult to do, hard to manage, and they don't recognize the market opportunity in Asia. You have billions of people in this market, and I think that's one of the key issues that are overlooked as well. So I think it's a bit of a complex issue, but I think it's a lack of knowledge primarily for these founders and entrepreneurs. And then they may, from their perspective, take the easy way out, just set up a company wherever they're at in that country. And they get down the road, and as they start to scale, as they start to see success and profitability with the company, then they're kind of stuck. They've already committed. And to change that dynamic in a given jurisdiction could be difficult. But that doesn't prevent them from actually coming to Asia and setting up a company and expanding into the market here.
And I think another reason why a lot of founders and operators are not thinking about Asia is because the service providers that they're using is focused in their region. So it's not even with a global service provider, each entity operates by itself. Each law, regulations, and all, it differs quite a fair bit. So it's the lack of experience and the lack of knowledge. And I do feel when I speak to a lot of the founders that have come on board with PikoHANA, that's why they keep telling me, why didn't I meet you guys earlier? Why have I not heard about this before? Then they realize that the service providers they've been using is more focused in where they were originally from.
No, absolutely. Absolutely. So to you founders out there, why does this matter to you founders? I mean, look, you're scaling fast, but you're bleeding margin, right? Compliance is growing, but your capital's shrinking. And, really where your HQ is based can save you millions. And I think that, these are some of the key points that you guys are kind of hinting at, and we were just to get right to it. Here's why it actually matters to these founders that are sitting overseas. And as you said, Jamie, not a lot of times are founders in these other markets going to get this level of information and kind of on the ground in region insights in terms of the advantages of, diversification of their positioning and some of the tax benefits. So, as you mentioned, Matt, the global business shift. And, since these high tax zones, maybe you can get a little bit further into this part. And I know that, here is talking a little bit more about Canada, because I know Canada is a big topic now. And it would be great to kind of get your thoughts a little bit on why, let's say, Canadian and European founders of companies would want to engage, let's say, PikoHANA, and would want to engage the region in itself.
Well, I think one thing that everybody needs to recognize is that wealth is mobile. You don't need to stay in a high tax jurisdiction. Now, we haven't gotten to the taxation comparisons yet, but it's pretty ridiculous how much companies are taxed in places like Canada and Europe. Most of them are being taxed. If you combine the net profit, look at that right there. So this is a combination of profits tax and then dividends tax that impact companies in these jurisdictions. And the tax rate is unbelievable. We have firsthand experience with people in Canada, as an example, and they were, received dividends and income from companies in Singapore. They're based in Canada, and they received less than half of what was paid to them because they were taxed on everything. It's really unbelievable. It is something that confounds me on how people cannot think this through. But again, I think they're kind of focused on the moment, trying to set up a company. Then they're focused on scaling operations. You know, who has time to think about tax structuring? And if you don't have the right advisors around you, then you're going to be exposing yourself to this situation. The fact is that when you look, and that screen's a little small for me, Will, but if you go back to the previous page where it showed the total tax on this, you know, you're looking at, you know, 65% cumulative taxation in Canada versus, you know, 15 to 20%, 11 to 15% in Singapore. And a key part of that is that you're not going to be taxed, well, at high rates for your income, but also additional dividends tax, which just kill it. So if you generate a profit, you're going to get taxed at on or about 20 to 30% in most of these jurisdictions outside Asia. And then on top of that, you're going to get a dividends tax if you want to take that money out of your company, and they're going to hit you for another 34 to 40% tax. And at the end of the day, that kind of taxation doesn't make sense. What would be more effective is to set up a company in Asia where you have this relatively low tax regime. And then you're paying yourself or the firm in Canada, in this example, a consulting fee or a management fee. That is basically making that Canadian firm a cost center. And all that is just enough to pay yourself and your employees. And then you're trapping those profits in Singapore. And that can be managed remotely. Singapore has a robust legal framework, as I said before, international, multinational banks, access to brokerages, and you can put that money to work. What's even crazier, okay, so if you make it that far, and if you take the money you receive from the dividend after tax in these jurisdictions, and you turn around and you invest it, and you make a capital gain, what you're looking at is additional tax on that money too. That's an important part. So you're getting taxed at the corporate level, profit level. You finally make enough profit to issue yourself a dividend, and then you're getting taxed again. And the combined tax of that is going to be, 50 to 60+% in most jurisdictions. And then you turn around and you finally put that money to work in the market, and then they're taxing you on those capital gains. It's really, really insane. It confounds me. I don't know what people are thinking. What's that?
So it's just tax on tax, pretty much.
Oh, it's unbelievable. And people do it, right? And there's a really easy, seamless solution that we can offer to create a more tax efficient structure for your business. And then that money can be invested. And then in Singapore and Hong Kong, there's no capital gains tax. That's huge for your portfolio. Just think, if you invest $1 million, that's nice round numbers because I'm not good at math, but if you invest $1 million and you make a 20% return, the government's going to take maybe 30 to 40, maybe 50% of that, depending on the jurisdiction. That's a lot of money. And it's like you said, Will, it's tax upon tax upon tax. It's insane. And to me, I see it as unfair. It really doesn't make a lot of sense for founders and entrepreneurs to keep the company in these jurisdictions, especially if the company is scaling and starting to produce profits.
You want to be able to be tax efficient and still be able to survive and exist and be able to pay bills and all that. Yeah. And, doing a little bit of that Asia-based operation really could be, and there's some examples you guys have, like Alex in Toronto, for instance, right? Before right here, before he had 26.5% corp tax, 38% dividend tax, right? So that's almost half of the 1 million that he has right there. Now, after working with you guys and setting up in Singapore, well, the reality is he's gotten 85% of his revenues is still intact for him to be able to do other things. So this is a Canadian founder in Toronto.
Well, that's a good example. Yes.
Absolutely.
Well, the one thing I'll bring up as well, and I think it's worth talking about, Will, is, in this example, and a lot of our European clients look at this as well. So why not go to the Cayman Islands or Dubai, right, where they have zero taxation? Well, it's changing. So because of the WTO, because of the United States and their policies, countries have to have a minimum corporate tax rate of no less than 15%. And everybody is moving towards that standard. Even Dubai. Dubai is now going to tax corporations there, whereas before it was zero taxation. And, if you look at that opportunity there, it's not what it seems. Everybody talks about Dubai and the 0% tax. It's actually not what it appears, because, again, it's changing from a monetary standpoint, the taxation. They'll eventually move to the 15% rate. That's not going to happen this year or next, but eventually within the next 4 or 5 years, I would say that will happen. But more importantly, if you base your companies in these jurisdictions, you're going to have issues doing business globally. That's a big issue. Doing business in Dubai and doing business overseas from Dubai is a big challenge, because they don't meet the UN requirements around anti-money laundering and compliance standards. So if you're in Dubai, you're going to have a real problem getting sign off by potentially clients overseas, or if you want to open a bank account overseas. If you're doing business in Dubai in the Middle East, then Dubai is fine. But we see our clients having issues in Dubai as we speak on this front. As everybody knows on this call, probably, the anti-money laundering, the compliance requirements, they are becoming more and more demanding, more robust globally, from bank account openings to compliance checks on shareholders and directors and officers of the company. And you need to be in a jurisdiction that can meet those requirements. Singapore especially is well known for this. They have a very robust compliance framework here. It's a known financial center, financial hub globally, and people don't have any issue doing business with Singapore. So you can literally bill clients globally, whether that's the US, Europe, anywhere in the world. Singapore is looked to and accepted as a jurisdiction that is basically okay to do business. And that's going to be more and more of a big deal as these countries adopt these compliance standards and move forward with the WTO's requirements around taxation. You can be very confident that setting up in Singapore will allow you to execute your business plan and do business globally without any issues whatsoever on this front. Whereas these other countries like the Marshall Islands, Cayman Islands, as I mentioned, and even Dubai to a certain extent, you're going to find it a bit challenging. And maybe I jumped ahead there, Will. Apologies for that.
Oh,
but
no, actually, this goes
that's why Singapore and Hong Kong work.
Absolutely. So, I mean, let's get into that. I mean, that's exactly what you're saying. This is why Singapore and Hong Kong works. And now let's plug in PikoHANA into this specifically, because now what we've done is we've explained the landscape. We've talked now about the issues and kind of the issues with the different tax rates and all of that. Now, I'm sure the audience is saying, okay, well, specifically, what What is this webinar about? What are you guys going to do about it? What are you bringing to this table to be able to help us? Just if you were to give like an end-to-end solution a little bit for individuals that now are like, okay, you got my attention. What do I do right now? What can companies do right at this moment?
Well, they should call me, right? So they should definitely call me, and we can walk them through the process. But in general, PikoHANA is an end-to-end service provider. We provide incorporation, accounting, filing support, tax support. We basically are your business in a box on the ground in Singapore, Hong Kong, and other jurisdictions in Asia. We cover everything that you need to run your company. One great thing about Singapore is you can do it remotely. So everything is acceptable as far as digital signatures. Whereas in Hong Kong, they're still using the wet signatures. So it's a little bit more challenging to do business. We're also your representative on the ground in both locations and other jurisdictions. We are the legal representative of the company. We look after you and your company and ensure that you're compliant, meeting all the local laws, all the local regulations, compliance filings, and otherwise. We're also key advisors to our clients. Our clients come to us for a number of reasons. On market entry, we advise extensively. We support them as far as hiring of any employees on the ground in Asia. And when I say we support them, we can provide employer record services. We can also provide onboarding, contracting services for your employees. We don't provide legal advice, but we have partners who do, and we're deeply involved in that discussion as well. So we basically are a business in a box, your representative, your man in Asia that looks after not only your company, but helps you identify market opportunities in the region and how do you tap those opportunities. And we look at ourselves as long-term partners and key advisors of our clients' company.
Absolutely, absolutely. For those who are just not familiar with Asia Pacific, and using PikoHANA kind of gives you a sense of home away from home, so that some of the key takeaways about PikoHANA is that you're giving founders that more post-tax capital control, and also just giving them the insights in terms of the advantages of the markets from a base of Hong Kong and Singapore. And this is something that we didn't really cover during this time frame. You're saying setting up your operations in Singapore or Hong Kong, but you can operate anywhere from these places. That gives you the advantage of being able to do business in Dubai with a little bit more ease. It gives you the advantage of, dealing in markets like Vietnam or Thailand or Indonesia, which has a population that is pretty much the same size as the US. Not a lot of people know that, right? If you want to do things in Australia as well, you can do it from your Singapore and Hong Kong entity. And that would allow you to be a lot more versatile. I mean, the big elephant in the room is Japan. Good luck doing business in Japan if you don't have Asia figured out, right? And, doing it from New York is a lot different than doing it from Singapore. If you're doing it from Singapore, you have something kind of in the area, in the premise, in proximity of Japan. You can do Japan, you can do China, right? You're able to do Korea. So not a lot of people understand the complexities of the Asia Pacific market. A lot of people think it's just one market and everything's the same. But the reality is Vietnam and Thailand are two totally different cultures, totally different languages, have different buying cycles, different selling cycles, different behaviors, yet these two countries border each other, completely border each other, and they couldn't be any more different. So that is one of the key messages that I feel like the audience should definitely take on. And it's something that you don't have to be afraid of what you don't know in Asia Pacific, because you have you guys here to kind of do it. So as you said, people should call you. So anybody who's watching this webinar right now or in the future, definitely scan this QR code. You can book your free structuring consultation with Matt Foley and Jaime. Literally with them, you'll be able to have that conversation. You'll be able to see these guys face to face, and they'll be able to kind of address some of the topics that we're covering here in this particular webinar. But I did want to get into some rapid fire questions. Okay, so these are some kind of FAQs that we have, and then maybe you guys can expand on it a little bit, right? Do founders need to shut down their home entity to use PikoHANA? Do they just need to completely unplug and go for you guys? What do you guys have to say to that?
I think you have a glitch.
No, actually, it picks up perfectly fine on live. It's going to be fine. But in here, there's sometimes a little bit of a pause. Did you hear what I said, or do you want me to redo it?
Can you redo it?
Well, when you talk, it seems to...
No, it's fine. It's going to show up just fine on the live. So everybody, I know you guys are hearing us normally, but internally in the system, there is a bit of this is a common thing. So we have an FAQ question here. So do founders need to shut down their home entities to use PikoHANA and to benefit from this?
No, you don't. You don't need to shut down anything.
Will?
Jaime, I think you got it. I think it's on Matt's side, actually. But go ahead, Jaime.
So the question was, do you need to shut down your home entity to enjoy the text optimization strategy and all? No, you don't. You can keep the home entity, use it as a cost center, right? Just like what Matt did before, set up a Singapore entity, set up a Hong Kong entity, and that would be where you run the company out of, but your home entity could be a cost center. So you don't generate, it's just pure cost. You don't generate the profit. All the profits get recognized in your new home entity in Singapore or Hong Kong, right? We can layer it. The structuring can be about layering. And then we built in smarter remittance flows for you, so you get to enjoy the text optimization.
Okay, that's very interesting. Very interesting. So I think we're going to get Matt back in a minute, but let's go to the next question. Okay, so the next one is, can I still pay myself back home? So that founder that's sitting in Canada,
he needs to live on something, right? He needs money, doesn't he? He needs a salary.
Right? Ideally, right? So
ideally, yes.
So how does that work? Can they still pay a salary back home?
Definitely. They just pay the new entity in Singapore or Hong Kong that would pay the Canadian or their French or the German entity, their home entity, a fee. So they will be, it's like providing consulting services, and that's how their salaries will get paid. So nothing's going to change except with a new entity. Like I said, it's all about how we can structure it right.
Okay, and then here's the other common one, which is what about the investors? Oh my goodness, the investors are the most important thing, right? And that is ultimately the last and third biggest question that we have here is, what about the investors? How does that work?
No issues with the investors. It's all about how you're going to be reporting. I mean, having multiple entities, complicated investors, that's fine. I mean, PikoHANA has dealt with many before. I mean, we have had many clients who have exited very happily and they had many different kinds of investors, all the way from PE firms to VCs, and also we have dealt with it. Welcome back, Matt.
Welcome back, Matt. We got you.
I don't know what happened.
I don't think it was on our end. I think Jaime and I were just going just fine.
Everybody started cutting out and you couldn't hear me.
Well, we went through all the questions that Jaime.
Okay, maybe you dropped out. It looks like can you hear me?
Yeah, we can hear you just fine. Don't worry about it. Don't worry about it.
Can you hear me?
Yep, we can hear you. Jaime went through the whole thing, and everything seems pretty clear. But look, everyone.
But one thing I wanted to say, Will, right? I mean, all these questions that the audience might have, right? Feel free to reach out with the QR code scan, book a call, let us know, drop us an email, connect with us on LinkedIn. Yeah, shoot the questions across, and happy to have a discussion about it, right? To explore and bounce it off us. We're here to help.
Absolutely. So everyone, if you're interested in engaging PikoHANA, that's PikoHANA.com. Feel free to reach out to them. We're going to be doing many of these, and hopefully we'll have a little less technical stuff, but these things tend to happen with live recordings. All good, but you guys can definitely view this as a recording on the PikoHANA website as well, and on the LinkedIn page later on. So if you missed some parts from the beginning, don't worry, we'll have it up there for you guys to review, and also a write-up as well on the advantages of unlocking Asia. So Mr. Matt Foley and Mrs. Jaime Tan, thank you so much for being you and having this amazing company and helping people work out their tax issues globally. So I really appreciate your time.
Thank you, Will.
Thank you, Will.
Thanks, everybody.
Thanks everybody for joining. See you, Will. Bye, Jamie.
See ya. Bye, Matt.